Forex market, ladies and gentlemen, welcome back to the situation update. Today on the program, we're putting the currencies on the back seat and we're going to be analyzing the gold on this video and the silver in the next. Obviously, we're going to connect those two because, well, between those two, there is a very high positive correlation. So, you want to have the same conviction on both usually, right? There's very rare occasions where we see departure in the correlation. Anyway, let's check out the technical situation here. I wanted to touch base on those two because I feel that right now we're in a critical moment where price action is most probably going to shift direction from a downside trend, from downside move into an upside cycle. I wanted to start with the weekly chart showing you the big picture, and from here we're going to advance forward. So here we're looking at the weekly chart. We can go back all the way to July 2020. That's where the gold was setting an all-time high, right? Almost reached it reached 2070. Right, it reached 2070, and from that point it started to turn around and was mostly descending all the way to to late February, when it reached the level of 1676 on the bottom. Right, so we thought, I mean, looking at that move, it's easy to see that we can break it down into 5 legs, right? 5 waves, if you will. So that's a classic kind of Elliott wave cycle, 5-wave move all the way to the bottom. Then here's what's happening. We saw price action starting to lift off the ground, right, giving us that first wave up, and then of course whatever happened from pretty much from June all the way to this point was price action going down. But you can also see here this blue dotted line, right? This blue dotted line represents Fibonacci correction 76.4 only for the first upside wave here, right? What we're trying to figure out is whether price action on the way down just recently was correcting that move, or whether it is a fledged downside move on its own. So the fact that we've seen what we've seen here last week, and this is important, last week price action was nosediving. That's how it started. But at some point, as it was reaching 1680, something snapped and it turned around and basically started to hammer. It ended up the week positively, right? This is a classic hammer, bullish hammer. That's how we call this pattern. But the length of that spike, right, is just amazing. The length of the spike compared to the body of that candle, right, is what makes this pattern so unique. And the fact that it was slicing that blue dotted line, which is again 76.4 Fibonacci correction, last line. So the combination of these technical elements strongly suggests that this was a technical correction and it's probably over. So at this point we should expect the beginning of the second wave. Second wave, which there's a very good chance going to take us all the way to 2025 at the very minimum, right? At least a wavelength in the size of the first one will put you right there, pretty much 2025. But also this is Fibonacci projection level, very important one, 123.6 off the 5th wave from top to bottom, right? So we have kind of a natural strong resistance level to aim for, aside from the fact that we think price action will probably try to chase the previous all-time high, right? So everything from 2025 and all the way to 2070, that was determined back in July. All right, guys, so on the background of that really strong upside turnaround that we've had here last week, we're gonna be initiating now a bullish conviction on the gold with the target of 2025 as final destination. Right, this will definitely come back every now and then to follow up on the situation, and we'll make sure to keep you posted. That's about that gold. We're going to continue off talking about the silver, so don't go away.